Good afternoon, everybody. It is Saturday, June 14th, and we are just going to do a quick video to catch you up on what is going on and what to watch for over the coming weeks as we watch for shifts in the market. The first thing that we're going to talk about today is following the flows and not the story, not that narrative. You can argue over what is causing the ups or the downs. But if you follow where the positioning is and where the money is, you won't get lost. So first, as always, we want to remind you that derivatives trading is inherently risky and past performance is not indicative of future returns. Now, we have seen what is happening right now in the markets before. If we go back to October of 2023, when Israel and Hamas conflict started, that started on October 7th. If we watch what happened to the ES over the weekends, this is a very short dated market. So the conflict started on a Saturday. On a day by day basis, traders are less concerned because it's like looking outside at the weather. You can tell if it's sunny, you can tell if it's rainy, if it's cloudy. With fairly accurate precision, you can tell if it's going to rain in the next 30 minutes. But when it comes the weekend, when the markets are closed, when you can't protect yourself or get yourself out of a trade, you begin to get a little antsy. And so we see here that the conflict started on this weekend. And as we came into the end of the week, the ES sold down. That is everybody buying insurance just in case something happens over the weekend that they can't control. Then on Monday, when nothing overtly bad happens, Monday rallies. Then we go down again Thursday into Friday, and Monday and Tuesday we rally. Then again, we go down into Thursday and Friday, and at the end of the month, we rallied. This washing machine that we talk about all the time is playing out in the markets, and that is what we are likely going to see right now. That's why Friday, if we look at the price action, we went up until about 12:30, 1 o'clock, and then we sold off back down for the day. There were catalysts in the morning with consumer sentiment, and then everybody at the end of the day starts buying protection, buying insurance just in case something happens. And if anything happens that isn't overtly bad, like too bad, unplanned for, or unexpected, then we will see the market rally in the early part of the week. And this is the VIX during the same time. We can see in the volatility index the push up at the end of the week and then the sell off on Monday, the push up at the end of the week and the sell off. This is 2023. Again, so we are looking at this all the time. We look at multiple metrics to measure volatility in the markets, to measure positioning. We use other indicators to measure insurance demand and supply in the market, as well as how well protected people are with their millions and billions of dollars in the market, because you have to think of the market as a business all the time. So recapping some things that we went through with our subscribers and our students this week. On Wednesday at 9:30, we mentioned that vol will be key at 1637, and that will either signal a market top if we hold, meaning the VIX holds and goes up, or if we break that, then there's room for upside. But if we look at what happened, we came there at 11 o'clock and we mentioned that was going to be a sell-off, probably a top. And sure enough, we got the sell-off. So there was the 1637 and the sell-off on the ES. And then again, we came back down, and this is a divergence that we see. The VIX held its level and the market sold off. And this is our now local high. This is our high of the quarter. And we also mentioned in the morning that CPI would be mean reverting. That was because of the way the positioning was set up, that we saw the up move, but it wasn't going to have legs. We would mean revert. And sure enough, we did right back down to that 6,006. So we missed it by about 3 points. But again, we can see these things happening, and the likelihood is very strong if you understand how to follow the flows and stop focusing on too short term of trades or the narrative. That everybody needs to know the why instead of when and what is happening. Don't focus so much on the why as much as the when and the what. How do you use the information? And again, for our elite students, and we went through this a few minutes after that on Wednesday, that If we retested around 56, that would send us lower, and failing 6,000 with a retest of 21 will tell us more downside. And if you look at Friday, that's what we did. We opened below 6,000, we retested 26, 27, and then we sold off 50 to 60 points from there. And that is exactly what we were looking for um, days in advance. And then we went into this over the week. The cost of business is rising. So if you think of the market as a business, if costs start rising for a business, they make less money. In the market, what that tells us is that opens the door for downside. If things start getting more expensive, we are not going to see that big push. We are going to see things go on sale. On sale in the market is prices dropping. So we see this in our yellow line crossing zero on Wednesday, the 11th. And then we see the blue begin to tick up here as the week went on. And we see the cost of business now increasing. And this is the same signal we got back in February. And it took a while for us to get the big down move, but we've gone over this in several videos since of the cost of business. When it's decreasing, we get more favorable outcomes. When it's increasing, we get less favorable outcomes in terms of the upside, in terms of the bullish side. We're not bulls or bears. We are just purely following the positioning in the market and the cost of business. So, with all of these things, on Wednesday, we were sitting here looking at a downside potential in the market with a lot of potential uh, risks and a lot of signals stacking up. Did we know that Israel was going to attack Iran? I was not privy to that information. I am not on any kind of list to get any of that information. But if we follow the flows and follow what the business was telling us and what some of the people who probably do know are positioning themselves for, then we as day traders can follow that and really capitalize on this. Think of it like a business, focus less on the stories you're getting and focus on what is actually happening in the markets. And then you can front run a lot of these geopolitical events because the US began pulling personnel out of the embassies and uh, changing the way they were structured, changing our exposure in Iran and in the Middle East, shifting the positioning of the military, shifting the positioning of personnel weeks ago. And so that kind of foretells this. Now, when does that timing come in? We can see the timing beginning to set up. So we know starting on Wednesday to begin looking for that downside move. We want to know where the risks are and when the market starts to price those in because we can capitalize on that. We don't have enough money to move the market on our own. We don't have the information that insiders do. But if you learn to follow the flows, you can have just as much information as those insiders because when they start putting trades on, you can capitalize on this. So, some ways to level up your game over the next couple of days are learning to follow the flows and not the narrative, sticking to your process, and understanding the business cycles in the market. We have several business cycles coming to an end this week, multiple actually, and then again in the following weeks. So, these shifts in business cycles, it's just as if you had your own business at the end of the month or the end of your period. If you're going to present information to the bank to try to go get a loan, you want those numbers to look good. It's no different for a mutual fund, for a hedge fund, for a market maker in any market, whether it's an equity, an option, a commodity to want to paint the tape and make their books look good. The same way that we see companies do that ahead of earnings. So understanding these business cycles and how that likely plays out, and then what changes after those business cycles end and how things can open up. So then things to watch for this week, washing machine coming back from Fridays to Tuesdays for the next couple of weeks, as there is uncertainty in the market as long as this conflict will remain. And there will be a need to protect for any downside risk. And then we can understand if you know where to monitor those flows and where to monitor if that demand is gone or how much supply is left, then you can really time the market. We have proprietary indicators for that. But overall, it's going to give you a sense of what's happening. Watching the cost of business changes. Again, we've been talking about this, that the cost of business began increasing, signals there is more risk in the market. And this spike in the cost of business now, we would need to see that come down, the cost of business lowering, the same way that if you ran a sporting goods store and Nike drops their prices, you're getting Nikes cheaper. All of a sudden now you sell them for the same price, you're making more money. If the cost of business drops, you can make more money. In the market, that means more upside potential. Understanding the positioning and volatility, you want to be watching for that. Again, we have our own metrics for monitoring that. If you have your own way of doing analysis on an instrument, I would suggest watching the different volatility instruments. And then the catalyst for the week and insurance demand. Again, we monitor and map this minute by minute throughout the day and overall for the week ahead. But the catalysts are what people always want to prepare for, whatever that event is. If it's a known event, that's usually why it's not a major event. People can prepare for it. It's the Black Swan event or the weekend event that begins getting more attention. We saw that with Israel and Hamas. We saw that with Ukraine and Russia. We've seen this time and time again where there's weekend risk. And if there's no protection for that, then we get a big sell off on Monday. If there is protection in the market for that, then usually it depends on how people are positioned, but we usually don't see as bad of an outcome on Monday. And that's usually where we see the rally that we've gone over. So this is what you want to be watching for in the market, especially as we begin changing regimes, ending Q2, quad witching coming up this week. There's a lot of factors in play that are going to shift the positioning. Doesn't mean that this bull push is over, but we have a lot of risks beginning to stack up in the market. And if you learn to measure and map those, or if you want to join a room where we can help you understand those, feel free to check us out and have a great weekend, everybody, and stay safe out there.